there's just a lot of uncertainty out there in the market today, with everything, rising rates, inflation, more. I mean, there's just so much noise out there in the market. And the great thing about owning real estate specifically, and real estate investment trust, or REITs, is that there is a very high degree of predictability. We're talking about real estate. Real estate, after all, is the glue that holds all of these businesses together in the world. You have to have corporate office buildings, manufactured buildings, housing, shopping centers, groceries, drugstores. So you name it. Real estate is such a massive, broad category that you can't ignore it. You use it every day. You're sitting in a building, I'm sitting in a building. So real estate is really the key here that we're talking about. And the very predictability and reliability of the rental income that's generated, of course, which is translated into net income, which of course is translated into dividends and dividend growth. So it's that high degree of predictability. Now, the market has sold off. REITs have sold off year to date. However, when you look at history, and one thing I like to do in the REIT space, we can go back to over 60 years, unlike the MLP sector or the BDC sector, which isn't as dated as the REIT sector is. You can go back over time to look at the performance of how REITs have performed. Now, in a rising rate environment, I like to look back at the period between 2004 to 2006. And if you look at that time period, there were 17 Fed hike rates between that period. Went from 1% to 5.25% as the economy was improving. And of course, REITs outperformed both stocks and bonds by a pretty wide margin, I might add. So I think when it really boils down to the predictability of the income stream and the rental growth. Now, I want to touch on rental growth, because rental growth is really the primary driver, or really the primary catalyst that we look for total return performance. And in 2020, the year of the pandemic, REITs underperformed by around 6.5%. I'm talking US REITs only. Global REITs underperformed they were off negative 18%. Last year, we saw a rebound in the REIT sector. The equity REITs in the US were up around 12%. This year, we're forecasting, and analysts are forecasting, an average, our consensus data, is that REITs will grow by 16% in 2022. That's a significant growth number and a significant catalyst that means that REITs should continue to outperform like they did last year in 2021. We're expecting the same results could occur in 2022. Again, measured by the growth of these companies and how they've been able to plow through the pandemic. And real estate is a necessity product. You use it every day in all walks of life. And the great thing about investing in REITs is you have all of this very broad, I call it, universe of different property sectors and subsectors. And there's some specialty sectors we can touch on if you would like, that gives the individual investor many types of opportunities to develop their own portfolio based upon his or her own risk tolerance level. So again,
Brad, let me jump in real quick. You actually touched exactly on what I wanted to ask. Given some of the changing dynamics from a macro and monetary policy perspective, we're talking, changing in consumer spending, affordability, rising rates. What sectors of real estate are attractive right now, and which sectors do you feel face the most significant headwinds?
Sure. And, look, it's interesting. Today, for our members at iREIT on Alpha, we initiated a couple trades. We bought two stocks that we weren't able to buy for a while. And these were both what I call part of the technology trifecta. So if you think about it, within the real estate spectrum, there's the basic technology sector we refer to as cell towers. And of course, cell towers is what drives a lot of the demand for our technology. All of our phones are powered by technology. So cell towers, certainly a great sector. Then you move over to the next part of that stool. I refer to it as, again, there's three parts of this technology trifecta. You move over to the data centers. And we saw a sell-off, and we continue to see a sell-off in the data center space. And Equinix is a name that we have recently bought as of today. Shares have gotten cheap enough for us to buy them. Equinix, of course, is one of the largest data center REITs. And we have Digital Realty, which is the second largest position. Now, unfortunately, or fortunately, if you're, I guess we're an owner, several of the data centers have been sold to the private market. KKR bought one of those. Cyrus One was a company that we covered recently, and QTS was sold to Blackstone. But we have some other names that are coming, so hopefully we'll add some more constituents to the data center sector. Then I want to move over to the third leg to the stool. Part of that technology trifecta is, of course, industrial, or specifically, Leslie, logistics. And that is the area, that's the final piece of that, the last mile that you place an order on your iPhone. It goes to the data center, the order's filled, goes to the logistics center, and then it's shipped to your house. Logistics have sold off. Now, we had some news recently with Amazon cutting back, and Amazon's results, that sparked a sell-off in the industrial REIT sector. So today we took a very entry, small position, I should say modest position, in Prologis, which is one of the leading industrial REITs, the largest industrial REIT in the world, with a fortress balance sheet, of course, A-rated company. So we were able to take advantage of that sell-off, these price declines, to really own more of this technology. Now, when we look at the earnings growth, or the FFO growth for these REITs, you can see that all of those sectors that I mentioned, cell towers, data centers, and logistics, they all have above average growth profiles because of the technology that drives those businesses. So we like those names a lot. We've been watching those, and finally we're getting a pullback, an opportunity to put capital into those companies.
To listen to the full episode, head to seekingalpha.com and search for The Weekend Bite, or just scan the QR code on your screen now.